Hello, dear traders. This is Alex Gerchik, and today we're going to have our usual biweekly analysis of stock market. We're going to take Nasdaq and New York Stock Exchange, just the pure stocks. I want to begin with my favorite ones. There's a favorite stocks that I always love, but we're only talking about the longer term, and some of them we're going to show you a short term what we're looking for. Please analyze them, stay with us, watch them, follow them, and if you like our company, get registered with us. We're Gerchik Co Company. What I want to tell you is we're going to start right now with my favorite stocks. I'll show you right now. Okay, we're about to begin. There's a little list I made, the 3 of my favorite stocks. Actually, it's 4. One of them, it's not for the longer term. The company, the first one is Google. Why I love Google and why basically my son has Google in his portfolio. We're talking right now for 3 of the stocks: Google, Facebook, Amazon, and Apple. We're only talking about right now for much longer term, holding in our portfolio for the next 5 to 10 years. And then we're gonna go into the intraday situation where basically you can trade the intraday situation. Google, why I love Google for many years already. Beyond the point becomes a huge company which has a lot of cash, have very strong business, and the most important thing, they do make a lot of money and they do buy competitors. The Google, as I said, the beyond the point, it's the company which has a many different kind of businesses in commercial, infomercial, and everything that has to do with money to be made in the internet. This company is going to grow very fast. They do spend a lot of money and the technology. They do basically create the technology. I would say they not only make money on the technology, they create the technology. So I think the Google for the next 5 to 10 years, let's say for the next 5 years, will easily double your money. Obviously, of course, we cannot see the situation where the market will collapse at one point, and obviously, the market will collapse. A lot of stocks basically are going to go down because the people are going to get out from the stock market. But in this case, if the market is going to go down, the Google, if it's going to drop down, seems like all other Facebook and Amazon, Apple will create a huge opportunity for the people to make money. So any opportunity when the Google, Facebook, or Amazon will go down, it's opportunity for you to buy. The next stock is a Facebook. As I said, the Facebook as well, beyond just social networking, it's beyond everything else. This is as well the company which is building the technology and they're making a lot of money in the commercials. There's a second company, second to Google. They're probably going to grow at a very big pace. The company has a lot of cash. The company buys everyone and they do make a lot of money. And I think personally, this is the next company of the future, and you can make a lot of money with Facebook as well. The third one is Amazon. Very interesting company. A few years ago, the company basically was a little struggling, like 3 or 4 years ago. And lately, what's the beautiful part about Amazon, why the Amazon is such a good company? They also, beyond all of this company, Facebook, Google, and Amazon, beyond the point what this company is advertising, they're doing it. So if before, for example, you ask someone what the Facebook doing, everybody would say, oh, they're a social networking company, social network. And if they ask you Google, this is the system to find something. What's the Amazon to buy and sell something? All of these companies, Google, Facebook, and Amazon, beyond, they're doing beyond what they've done before. So this company, these 3 companies, is the future, basically, of the stock market. I think personally, these companies are going to make tons of money. This company doing everything for the people to spend money. They're creating a different technology. They're creating the marketplace. This company created a marketplace. As you can see, anywhere you go, everywhere is the products to buy. I mean, you open the telephone, you look for something, and then, all over, right behind you, buy tickets, buy a car, buy something else. That's what this company do. What I don't like about Apple, what I don't like about it, for those who live, let's say, in United States, they know that it came out with the iPhone 7. The problem was with iPhone 7, for example, the problem with I did not like it, that when I went to, let's say, AT&T service, a telephone company, they offered me a free phone for the exchange for the iPhone 6. And the reason I did not take the iPhone 7 because it did not even have a jack for the headsets. So what I figured out, I couldn't answer the question why basically the company would give it away free new iPhone for the old iPhone. I couldn't figure it out. I just know one thing for a fact, that before, many years ago, people were staying online to get the iPhone, any iPhone. You understand? The people used to wake up 2, 3 o'clock in the morning, go into the Apple store and buy those. And as far as what I see right now in the iPhone 7, I don't see any advantages to the iPhone 6. So that's why I don't like it. You know, I don't see that iPhone, basically Apple can come up with something super crazy. Unless they're going to come with something super crazy, then probably there's a chance for this stock to grow. But what I want to show you as well, I want to show you the weekly chart for the Apple. As you can see, at the level of 120, it's the weekly chart. The Apple has a huge resistance level, huge. And after that, there's 130. So for Apple right now to go up, it needs to take a lot of buyers, a lot of funds. Why Amazon, Google, and Facebook are going up like crazy? Because the big funds are buying it. They're buying like crazy those stocks. They believe, they see the fundamentals. Those companies are growing like crazy. Their fundamentals are fantastically well. The companies are positioned themselves. The company business is very good. They buy all the competition in order to control all the market. So that's why I would put for Google, Facebook, and Amazon a big high five. The next step, what I want to show you some stocks that we discussed last time. The next stock is a CXRX. If you take a look at the CXRX, the company basically went from $32 a share, where it was recently, just somewhere in April, all the way down to $4. Then, as you can see, the stock tried to pump a little bit up to the upside. Just for you to understand, while the stock was going down, company was trading together. If you put everything together, probably 30, 40 million. So on the short side, there's at least 2 or 3 million shares, short sellers. As you can see, it was a very big volume, very big squeeze for one day, almost 20 million shares, with a very big volume. And after that, the stock basically keep dying again. So what do we see in the CXRX? That's the name of the stock right here, CXRX. If you basically take a look, anything below 344 will basically generate a very strong short signal. What I can see in CXRX, it's breaking all weekly chart. The stock used to trade, just I'll show you right now, CXRX. I'll show you the weekly chart. As you can see, the company came out in business in 2014. You see, straight from $4 went to almost $90 a share. Everything is fine. Now you can see what's going on with the stock. It's basically slowly dying. We broke the previous IPO price, which is extremely bad for the stock. And right now, it looks like something is wrong with the company. I don't know what exactly wrong. I don't look at the fundamentals, but I can see just in the chart that the stock is dying. The next one is RGSE as well. The stock was before, just recently in April, about $18 a share. Now it's trading at $2 a share. As you can see, the fundamentals of the company is probably dying. The company basically tried to do a very big run right away. Sell off, went all the way down back to $2, and now it's testing the low. So it looks like the company is going to have a very big problem. It's a solar company, and it basically had a reverse splits, which is extremely bad for the stock, and it looks like it's gonna die. So please just write it down, those stocks, follow, and see what I see. The next stock, basically, I also looking for the short position. As you can see, after big gap, the stock did not go any higher. You see, we had a huge gap, and right after the gap, the stock started to consolidate. So now basically we're at the lower side of the level. And if the stock is going to break $13 a share, $12.90, $12.95, then the company is going to have very large problem. We're going to probably see a very deep sell-off in a stock, very deep. So what I'm doing right now, I'm just doing the homework for you, my friends. The stock is going to get destroyed. Another company that I like on the short side, I like to short, and it's MTW. MTW right now looks extremely bad. You see, it's at the intermediate level right here, and it broke it down to the downside. It's trading right now at the low side of the level. But if the stock is going to break $4 a share, the company is going to have a very, very big problems, very big problems. So watch this company. The name of the stock is MTW, and if the stock is going to break $4 a share, it's going to have a lot of issues. There's another company, FLDM, as you can see, it's also collapsed, but right now is in a range between 550 and 450. The longer the stock stays between those levels, between 450 and 550, the better the get out of the average is going to be. And another company that I also put on my list, FLKS. The stock is getting totally destroyed. This company last year was at $24 a share. Right now, as you can see, it's $6, and it's going lower. Some very deep problem with the stock. The only one thing I don't like about it, it's a very low volume. So what it is, when you can see such a low volume, you know you can get very big squeeze in the stock. Once basically somebody is going to step up and just try to buy it, we can see all the way to $7.50 to $8 a share, the move of this particular company. Dear friends, as you can see, we're not trying to give you bunch of everything. We're trying to give you a short recommendation that you can follow and understand what we're doing. The Gerchik Co, we're a great company, forex company, which offers the service, high level of service. So if you have any question, please write it down. It's at GerchikCo.com. All the best. You just had Alexander Gerchik with our biweekly analysis of the stock market, and we'll see you in 2 weeks. Every 2 weeks we're having recommendations for levels of a stock market, and every 2 weeks we have recommendations for the forex market. So please watch us online, come to the Gerchik Co and trade with us, make money with us, and watch what we do. Thank you. It's been Alexander Gerchik.